So I've mentioned this thing a bit, a credit score, like what is it? It is kind of complicated. I don't think most people are that familiar with it. So this is a screenshot from today. And as you can see here, I had a bit of a dip. And this is when I opened the new Apple Card. So every time you open a credit card, they're going to do a hard inquiry on your account. So it'll take an eventual dip, but over time it'll jump back up. And so this is a FICO score. It's out of 850. And it's something I'm very proud of.
That's super high, sorry.
It is. And it's going to take time for you guys to get there because, like I mentioned, my first credit card was when I was 18. I've had no debt. I haven't had any expenses on any rollover expenses on the credit card. And I've been building that credit up over years. And that's kind of why I want to talk about credit scores and why they're important, what they are, and kind of how you can utilize them. So one of the main things is, what is a credit score? It's basically just a number that's correlated to you on your likelihood to pay that money back or to pay that credit back. So it's an important thing to build because it's linked to getting more credit cards, to getting loans, to getting mortgages, and some employers even do background checks or do credit checks on you. So if you have a job that has some security job or anything that's in the financial industry, they'll actually do a credit check on you. And if you don't have a good credit score, there's a good likelihood they won't hire you because you're at risk or that you're not trustworthy to that financial institution. There's a few factors that really impact your credit score. One of them is your credit utilization. So example of that is, let's say you open up a credit card, you have $5,000 of credit available to you, but every month you're spending $5,000. That's really going to impact your credit score because you're using 100% of that credit available to you. And that's why opening up multiple credit cards is actually building credit, because if you're adding another $5,000 credit card, you're doubling your credit that's available to you. And that 100% utilization is going to drop to 50% just by opening another credit card. So when you open cards, you take an initial hit, but over time it's going to build up to a higher score. Some of the other impacts are the age of your account, so how long you've had them open, but it's an actual average age. So if you opened a card like 10 years ago, but you just opened another one recently, it'll take the average of those two. So that's why it's good to continually build this over time. And you don't need to get 15 credit cards. I'm not saying that anybody needs to do that, but it's something you can work towards. And opening up just a few credit cards a year and keeping the natural spend is going to build credit and also get you some free travel. So lastly, if you're not able to open up credit cards, let's say you're just getting started, you haven't built any credit, you don't have anybody who's willing to make you an authorized user or co-sign for you, there's these things called a secured credit card. And basically this is for people who want to get in and start building credit, but they don't have any way of getting started. So basically this gives you a way to do that by giving the bank or the credit card institution an upfront amount. So for example, you would give the bank $5,000 and then you would have a credit limit of $5,000. And that way you can't really overspend and go into debt. So it's a good thing if you're looking to get started.